Hey guys, today's video, I want to speak to buyers, specifically first-time home buyers. I see it all the time. You're a first-time home buyer, you get approved, you're super excited, you start going out and seeing houses, and then you get discouraged by what you can afford. You get discouraged by the types of homes that fit into your budget because the market's crazy right now. And what you say is, you know what? I don't think we're going to buy right now. I think we're going to save up money. We're going to continue to save money because we can't find exactly what we want right now. And we're going to save up money for a little bit longer. And that way, hopefully we can get something we really want. Today, I want to show you why that might be a really bad idea. And it's an idea that may actually price you out of the market altogether, or at best, it may cost $50,000 to $100,000 or more for the same homes you could get today if you wait for the future. Let me get into it. Let me show you my screen here. Let's say you were approved back in July of 2021 for $400,000. That's a tough price point to be in for a first-time home buyer, but it's possible to get a home, a decent home at that price, depending on the area that you're looking in. Specifically, obviously, Thurston and South Pierce County. That's a lot where you can still get those types of homes. And let's say you go out, you start going shopping and you say, gosh, I'm not falling in love with anything. I'm going to wait and save up my money. Sounds like a good enough idea. Well, what's happened since July of 2021? Home prices have gone up $50,000 on average. So the homes that you were looking at $400,000 back in July that you weren't really in love with, but could have worked for you, are now $50,000 more today. What's worse is that interest rates have gone up 1.5% to 2%. If interest rate goes up even just 1%, you lose 10% of your buying power. So let's just use that as an example. Let's say interest rates have gone up only 1%, even though they've gone up more than that. You were approved over here at 400,000. Now you're only approved over here now at 360, and the home prices have gone up $50,000. That's a $90,000 swing. That means you would have to save $90,000 in 8 months just to break even. Let me tell you a quick story about some clients of mine that 2 years ago bought their first home. It was not a home that they were overly excited about. In fact, it was in an area that I didn't really love for them. I mean, I told them that. But they liked the area for commute purposes and certain reasons and went ahead and bought it. About 10 months later, they called me and they were saying, Trav, we're not really very happy here. Can we sell the house? We talked about the pros and cons of selling before 2 years, having to deal with capital gains. They decided to wait. We now are selling their house right now, and they're going to be able to walk away with about $118,000 in their pocket. They could not have saved $118,000 over the course of 2 years. Most of us couldn't. But because they bought a home that they didn't love, but it was a home that worked for them, they were able to gut it out for 2 years. And now they can sell and buy something that they really, really love and are excited about. To be honest, had they not bought then, they would not be able to buy a house. They would not qualify for enough money in today's market to even buy the house they currently own, let alone make $118,000 in 2 years and buy something that they absolutely love. That is the power of real estate. And it's something we're so passionate about, is helping people build wealth through real estate. And I know as a first-time home buyer, sometimes it's so hard because you really want your first home to be something that you're absolutely in love with. This market's pretty intense and it's pretty crazy. You might end up settling for something that's doesn't quite check every single box. But as long as it's livable, it's in good shape, it's not a money pit, it's something that maybe it's not quite as big, or the rooms are a little small, or maybe it's just outside the area you were hoping to be in, but it works, it's usually the right thing to do is go ahead and go get it. Because oftentimes, if you wait, as you can see, if you wait, you wouldn't even be able to get that 8 months from now. And you say, well, Travis, but isn't the market going to, I'll just wait for the market to crash. The market's going to crash, right? Well, let's take a look. Let's look at what happened during the crash. First of all, I want to show you month supply of inventory. Okay, this is the metric that says if no more houses come on the market today, There will be no more houses in how many ever months. In our case today, we have 0.7 months of inventory. That means it's about 20 days. So that means if no listings come on right now at all, we just stop doing listings. In 20 days or less, we'll run out of inventory. There'll be no more houses for sale. Now that's theoretical. That's obviously never going to happen. It just means our inventory is really, really, really small. Well, the crash happened. Prices started going down in February of 2008. January was the height, and then February we started to see the dip, and it kept going down. January 2006, there was 3 months of inventory. It's almost 3 times of what we have right now, right? 2.5 times of what we have right now. 3 months of inventory. Home prices continued to rise for the next 2 years, and then in February 2008, once we hit 6.4 months of inventory, prices started to fall. They continued to fall, continued to fall, continued to fall. Even as inventory started to go back down, home prices did not start going back up until April of 2012, when there was 8 months of inventory, and then but it was heading down, and prices started to slowly creep up. As that inventory shrunk and shrunk and shrunk over the years, and really intensely the last 2 years, home prices have just gone through the roof. We see what happened in the last year. Home prices on average are up 18.8% year over year. That's insane. In some places, it's like in Redmond, in the last 8 months, it's up like almost 75%. It's just insane. Now, is that going to level out? Yeah, probably. But what I mean by level out is we're not going to have 18, 20% of appreciation every year. That's not realistic. It will slow down to a normal 3 to 5%, but that just means home prices are just going up. They're still going up. They're just going up slower. And as interest rates creep up, that will slow things down. But what's the chances of us having another huge price reduction where people are losing, let me get 10 years here, or max here, where people have lost, like during the crash from February 2008 all the way, or January 2008, home prices were 344. And then at their bottom, they were 239, I think. Yep. It's over $100,000 in equity lost in 4 years. What's the chances we're going to see anything like that? Probably pretty slim, given the fact that home prices or inventory is at 0.7 months. We're nowhere near the 3 months that it was 2 years before the crash. We got a long ways to go. Now, I don't have a crystal ball. Something could happen tomorrow that changes this whole thing. But when we look at the statistics and the averages, I think the statistical odds of something like that happening and waiting for a huge crash and for prices to come down, how much higher do they need to go up? We said there was about $100,000 in equity lost over the course of 4 years. How much higher do they need to go up over the next couple of years before we even realize something like that, if it even does happen? They'd probably go up another $200,000 maybe over the course of the next 2-3 years. Possible. I mean, we're seeing home prices go up right now 50 to 100 grand a year in some cases, if not more. That's going to slow down. But over the next 2-3 years, could it go up another 50 to 100, 150, 200 grand? Very possible. And even if they dropped another 100 grand, even if that did happen, it's still a losing math equation from what you could buy a house today at. So I share all that with you to encourage you. If you're a first-time home buyer and you're discouraged by the market, if we can find you a house that works, a house that is livable, it's much better than throwing away money on rent. My guess is you're probably spending anywhere from $15,000 to $30,000 a year on rent. And that's money that you could be paying towards yourself as you grow your equity. And you stay in a home for 2 to 5 years and you're able to sell it like my friends just did and make $100,000+ on it and go buy something that you really love. You would never be able to do that if you rented for the next 2 to 5 years. You'd be stuck. You'd be stuck renting. And not only that, you might be priced out. As I mentioned earlier, the example I gave, they couldn't afford in today's market. They literally couldn't afford the house that they live in today had they not bought it 2 years ago. If they were trying to buy it right now, they couldn't afford it. Instead, they're selling that house, making $118,000 and buying something even more that they really, really love. So I hope that helps. If you have any questions, please let us know. We'd love to take great care of you. If you guys are thinking about buying, selling, or investing in real estate, we're very passionate about helping people with that. And man, I'm telling you, all you first-time home buyers that are approved and ready to go, if you can get into a house right now, it's better to go now, most likely, than it will be to wait. And we'd love to take great care of you. Hope you're having a great day. Take care. Bye.